Welcome, and thanks for listening to Cherry Bekaert's Government and Public Sector podcast series. In each episode, we hear from the best in the business on the latest challenges, trends, and opportunities affecting the government and public sector. I'm Christian Fjellgraf, leader of Cherry Bekaert's Government and Public Sector industry team. I hope you enjoy, and thank you for joining us.
Hello, everyone, and thank you for joining today. We've reached the end of our four-part series on GASB 101 Compensated Absences implementation. I'm your host, Danny Martinez, advisory partner for Cherry Bekaert. I lead our national team of accounting advisors that do quite a few things. We do help with ACFR preparation, help with financial close and audit preparation, and of course, what we're talking about today, implementation of new accounting standards, which this year happens to be GASB 101 Compensated Absences. We're ending our four-part series the way that we started with Scott Anderson. Most of you all that listen to this podcast know Scott, but for any of you all that are new listeners, Scott, will you please introduce yourself?
Sure. Scott Anderson. I've been with Cherry Bekaert for 20 years now. I've done a number of these podcasts with Danny. We also do webinars. I do a little bit of audit, a little bit of advisory. Spent a couple of years at the GASB. And so there's nothing I like better than to talk about the intricacies of GASB pronouncements.
Thank you, sir. And so we sit here in late March, and we started this four-part podcast series kind of at the turn of the year. And, in working with our clients and talking to people at conferences, we're really a lot further down the road than we were back there in January. A lot of people are mid-implementation, especially those June 30s. Seems like they started, the early group of people started, right after W-2s, 1099s, like February. But a lot of them are getting going right now. Just last week or a couple weeks ago, I presented on this topic at NASDAQ, and the states there who were talking about implementation, you could tell that they had already kind of went through the understanding of the standard, went through identifying the completeness of the population, and they really were getting close to preparing their journal entries, which is going to be the main point of our topic today. So the fourth phase in our Cherry Bekaert four-phase implementation is journal entries, disclosures, and go forward. And so that's what we'll be covering today. So Scott, first question as we dig into this topic a little bit deeper. When implementing this guidance, will governments have to restate their financial statements, and what will that look like?
Well, the answer to that question, as always, is it depends. Some governments will have to restate, some governments will not. It depends on what existing policies say. So GASB 101 was not intended to set the world on fire. It was just an update, and in many cases, depending on the type of compensated absence a government offers and their employment policies, a government could see no impact from GASB 101. But where we expect to see an impact is in the form of a restatement, is when a government has never recognized a liability for sick leave because it was not paid out upon the separation of services. And so now a government is required to assess the likelihood that that leave will be paid out or that it will be used during employment. And so that's a new liability, a liability that they hadn't carried before. Adding a new liability requires then the other side of the entry, you're not going to expense that entire liability in the current period. And so it would result in a restatement of your beginning net position.
Great, thank you. And what's different about those governments that have comparative financial statements?
Well, just like any other change in accounting principle, and this is prescribed by GASB 100, and you'll notice at the bottom of GASB 101 when it talks about effective date implementation, it references to GASB 100. So this is a change in accounting principle, which requires a retroactive implementation, which means you would restate the earliest period presented. So you would expect in comparative financial statements that you would have this new liability on both years. and you would only be recognizing the expense that relates to those years, which would result in a restatement of your beginning net position of the earliest year presented, so the comparative year.
Perfect. And I think that was a really good point in terms of, it depends, right? This is definitely one of those pronouncements that government by government, depending on the type of compensated absences they have, what happens at termination, what their policies say, the journal entries kind of will be different, based off of that. And that's really why we have it here at the end as phase 4. So those of you all who did not listen to our earlier podcasts, I'd recommend you check out the second podcast in our series where we talk about the completeness of identifying your compensated absences, and the third part of our podcast where we talk about the policies and procedures and the things that you all may need to add that would impact recognition and measurement, which then leads to the journal entries. So once they've done that, and once they feel really good, whether it is that yes, they need to put sick leave on, or no, things are going to be mostly the same, they're going to want to be building their entries. So when it comes to building the actual entries, what options does the government have?
So most governments already have compensated absence liability. In fact, I can't even think of a government off the top of my head that doesn't carry compensated absences. If you've got employees, there's going to be compensated absence liability. So there is already a calculation that you do every year. The difference is that calculation may not include sick leave. I think it's very reasonable to start with that previous calculation and just build on top of it, adding your sick leave. There is a nuance with sick leave that you will have to build into that, of course, which is that probability assessment. So if you calculate it by employee, you may have some additional columns in there to assess the probability, incorporating historical trend and determining how likely they are to use that leave. So you can build it in, though, based off of your previous calculation. Some may want to just start from scratch. To be honest with you, you may not like how you've always done it, and this would be a good way to refresh. Maybe there's been something about it a little bit clunky. Maybe even there's a part of it that you don't think is quite right, and GASB 101 might serve as a get out of jail free card. Just start from scratch, blow the whole thing up, and let's do it a more efficient way. So you've got those options.
Perfect. Yeah, when you were talking, you reminded me of a government. I don't know if I was talking about it with you or with someone else who realized through 101 that they weren't recording compensated absences correctly pre-101, and now going forward, as they implement 101, they're kind of going to get on the right side of GAP. In our experience on the advisory side, just echoing Scott's thoughts, that most people are wanting to build on to what they currently have, taking what they previously used for compensated absences and then now using this principles-based approach and layering on some type of items. Typically, like Scott said, has to do with that more likely than not calculation, the usage rate for leave, whether it is paid out or not. Those are some of the areas that we're seeing. So Scott, when they're building these entries, what types of things could make the entries more complex or make it a little bit more difficult to build from what they currently have?
Well, so as I mentioned, you're going to add the new fields for probability. You can be as precise as you want to be with those probability assessments. And honestly, we're accountants. We strive for precision. We want things to be right. But I do want to point out that there is no prescribed level of detail from the GASB. We at Cherry Bekaert, we have our own way of calculating it. We've got a little template that we use. I've seen the GFOA use a template. I've seen templates provided by other stakeholder groups, Nukobu, for example, or maybe a state auditor. might have a template that they put out there. And none of those templates are right or wrong. They're just templates or practice aids to be used. The GASB specifically did not want to prescribe how you come up with this calculation. In fact, in the basis for conclusion, if you don't mind, I'm going to read this. It says, some respondents to the exposure draft requested additional guidance regarding how to assess the factors in paragraph 12, that's the likelihood factors, such as how long a historical trend should be. And the board believes that establishing more specific requirements would limit government's use of professional judgment as to what is appropriate in their particular circumstances. Therefore, detailed application requirements were not included in the statement. So as with everything, or as with anything, one could really get carried away trying to achieve a level of precision in this calculation that really isn't necessary. In fact, if you look at the bottom of GASB 101, they have illustrations. They've got a number of scenarios, and it'll walk through the recognition and some measurement concept. Never does it prescribe how a government comes up with their estimate for this. So I guess what I would say is don't overthink this calculation.
Yeah, no, I agree with you. Let's not go crazy with the precision here. One of the things that we do in the tailored training, and we talked about it in phase 1, is we show you what balance you're dealing with. This is the line in your financial statements that we're dealing with. We also then will pull up the total amount of sick leave, because especially for those governments that don't pay out sick leave, and kind of show them, if you were to book all of this, this is what it would do and impact your liability. And then people are able to see that, okay, even if I take extreme sides of wherever I land on this more likely than not calculation, the change to the actual balance of my financial statement is not going to be so significant that I need to be spending all of this time building this super precise model. And then the other thing I'd encourage you to think about with this is, in future years, whatever you do this year, you're going to have to replicate in fiscal year 26, 27, 28. So be thinking about, can I land on something this year that is easily repeatable in subsequent years and still getting you to a balance that is reasonable for your compensated absence liability. One last thing on this. I mentioned being at the NASDAQ conference a couple weeks ago, and Alan Skelton, technical director at GASB, brought up the materiality box, right? It's one of the GASB's favorite things to bring up in their presentations about, the items within the statement don't need to be applied to immaterial items. And he said that when they think about the cost benefit of implementing new guidance, he said that they think about it in terms of the context of materiality. So whenever you go as a state or local government, beyond that, into some world of super precise precision that goes well beyond getting the balances materially right, that you are basically leaving where they think that where they are with the cost benefit analysis. So all that extra incremental cost that you're incurring, they're not thinking about that, because they're thinking about the cost just based off of the materiality box. And I thought that was a really interesting way to put it for this pronouncement in particular, where we're dealing with this accrued compensated absence liability. So Scott, we talked about the journal entries. What about disclosures? Can you fill in the audience on what's changing there, or what people need to do to be able to prepare for their entries? For the disclosures.
Sure. And this is the part where we acknowledge that the GASB doesn't just require disclosures for the sake of more disclosures. They are quite thoughtful about it. If you look at what disclosures in the past have been required, GASB 34 is really the source of the guidance. Since compensated absences are part of long-term liabilities, you've got the roll forward disclosure, beginning balance, additions, disposals, maturities, or whatever, and then your ending balance, and then your current portion. And so the GASB took a look at those requirements, decided whether or not they were useful. Interviewing users, do you actually use that information to assess, to inform your decisions? And what they found is while a lot of that disclosure is important, users don't particularly care about the activity. They want to know the net change. That's mostly what they care about. And so GASB gives you that option now, is where you can, instead of putting the additions and decreases to compensated absences, you can net it as one item. The other part that wasn't particularly useful was the requirement to disclose the fund in which the liability is liquidated. That becomes pretty important when a government is facing severe financial stress, but otherwise it's not very essential. That's no longer a requirement. And then if you read in the basis for conclusions, they actually looked at a lot of other possible disclosures. There could have been a lot of disclosures in here that when they assessed them, they decided they weren't that important, such as employment policies or expected timing of retirements, or there are lots of things that they could have required, but when they evaluated it, interviewed people, they found that it wasn't that important, at least relative to the cost of gathering that information. So the net effect of all of this is you've got less disclosure requirements than before. You don't have to disclose anything you weren't disclosing before, and you can net the activity, and you no longer have to disclose which fund the liability has been liquidated in.
Thanks. And can you share just a little bit about what, if anything, they might need to do to their summary of significant accounting policies, and then what they might need to disclose the first year if they're restating under GASB 100?
Well, summary of significant accounting policies has always been required, even when that liability isn't necessarily that as significant. It's kind of a standard disclosure that you see governments do. But your accounting policy might be changing as a result of implementing 101. You may have some things that you've considered. Flows assumption is a popular one. We talk about that a lot now. When you're assessing likelihood that leave is going to be used, you may have to look at whether or not you use FIFO or LIFO. So those types of things would be part of that disclosure still. And what was the second part of your question?
Yeah, GASB 100 restating.
Okay, yeah. So the first year, if you are having to do a restatement, there are disclosure requirements that come with GASB 100, where you're going to show in a tabular format what items, what reporting units have been restated, the amount, and the because it's an implementation of a new accounting pronouncement, you don't have to disclose why. All you would say is you're implementing 101.
Great. Yeah, GASB 100 itself has some really good examples of how to show it in that kind of table format. And when we work with our clients, we kind of have those three pieces: the summary significant accounting policies, what language you might need to include there, the restatement disclosure, and then, of course, refreshing your long-term liabilities disclosure. So, Scott, the last thing that we do, we've made it through this whole journey, and typically it's a 6 to 8 week journey with our advisory clients. The last thing that we encourage people to do is to record a day 2 training for next year to help the implementation team get everything documented, get everything out of their head onto a recorded video is usually how we like to do it while it's fresh in their mind. So you've either taught or helped facilitate a few of these. What have you found the benefits of this type of training and doing it right after you finish implementation?
Well, being able to follow it next year is important. One of the, I mentioned before that there's not a required way to do it other than you want to do it consistently every year. Governments often have turnover, and you can't assume that the same person will be doing it again next year. And so I think kind of having a video or some sort of leave behind, some sort of policy on how this gets calculated would be very helpful in then helping the next person arrive at the same conclusion.
Definitely, yeah. So just to kind of conclude, next year, fiscal year 26, you pull that thing back up July of 26 if you're a junior end. Okay, what the heck did we do last year? Especially if you're working with a third-party consulting firm like us, you have that as a resource. In addition, as you're going through your fiscal year 25 audit, if you're wanting to refresh yourself in the audit or what you did, that's a beneficial way to kind of cap off the entire implementation, right? We started with the tailored training, you end with the training for the going forward. Well, perfect. Thank you again, Scott, for taking your time to present and to teach on the journal entries and disclosures that we work on in phase 4 of implementation. To our audience, we are continuing to sign people up for our 4-phase GASB 101 implementation solution. You should be able to find the podcast for each of these 4 phases wherever you get your podcasts. In addition, we are doing a webinar in about a couple weeks on the 7 must-knows for GASB 101 implementation. So if you are listening to this, maybe it has already passed. If it has passed, you will be able to find a recorded version on the Cherry Bekaert website. As always, if you have any questions on GASB 101, audit preparation, any of the things that we do, please shoot me an email at danny.martinez@cbh.com or Scott Anderson at sanderson@cbh.com, and you can also find us on LinkedIn. Thank you so much, and we'll see you soon.
This was Christian again. I hope you enjoyed this episode and look forward to our next one. Don't forget to subscribe.